G'day, and welcome back to episode 2 of Forex Trading Robot, where we will be diving into the use of AI technology, or more specifically machine learning, to help find our little trading edge within the Forex market. But before we get started with this one, I've been thinking about how to best categorize all the episodes going forward, and I think it'll be best splitting them into 2 playlists, one that has more general trading content, and then the main playlist, which will hold all the episodes that relate to the work that we will need to do within SQX. Oh yeah. So what is machine learning technology? You may very conveniently happen to ask. Well, in short, it is a subset of AI that allows you to process or mine huge amounts of data to help you recognize patterns that occur in the market to help you make profitable future long-term trading predictions that work in your favor. So you are essentially throwing a bucket load of spaghetti against a wall until you find one of these subtle patterns that sticks to that wall. And as an example of this, off the top of my head, let's say that through its data mining, SQX found that if you were to go long in a position on Euro USD, when a bar closed, say, above a 20 moving average on the hourly chart, that in the long term you would make profit with the right money management techniques linked to these conditions. But don't actually try this though, I made it up. It's a bunch of nonsense. As a really quick sneak peek of machine learning in action, we're here within Strategy Quant X within the builder, and we've got some Euro USD data loaded in going back from 2011, and we are trading on the hourly chart, and so we'll click start and get the data mining process going. And straight away, you will see that the strategies per hour will go up to 1.5 million. So that's how quickly we are processing this data and analysing the data and looking for these subtle patterns. And down here, we're already getting different trading robots spitting through that have different trading solutions for this Euro USD data. And looking in here, we've got some very nice looking equity curves. I guarantee it's probably rubbish. This looks quite nice. But unless we do our strategy robustness testing later on, I would not trade these in real time because they will lose money. As nice as they look, don't get tempted. They are overfit, they're curve fit, they're useless, they're rubbish to us. And so this is the quick intro to Strategy Quant X that you will see for now. And this is the data mining process. So you might think that data mining is a relatively new development, but it's actually been around for quite a while. And it's been used as far back as the 80s, and it's been used by financial institutions to try and make predictions in the market that result in a higher probability of favourable outcomes in the long term. And firms like Renaissance Technologies, who you might have heard of, were pretty much the pioneers in this field. And there were some problems back then, however, due to 2 main issues, as you can imagine. And those being that they didn't really have the computational power or the available of quality data back then that we've now got. So we're in a pretty lucky scenario. And data is everything. And at the moment, many top-tier global hedge funds are currently using machine learning tech to find their edge in the market. And now that there are software packages available to us, such as Strategy Quant X, that are readily available for us to do this work, we can get a piece of this action as well and start to rival the consistent returns that these hedge funds are getting. So this might sound nearly too good of an opportunity, and really it is pretty amazing to get a part of this technology. However, machine learning does have its flaws, and it is not as easy as it sounds, and that's because machine learning trading strategy outcomes are extremely prone to overfitting. And for those that don't know what this is where your trading solution is designed in the most optimal way around your data to make the most out of the data set it is trained off. And for example, your system might just happen to be a part of every single possible major trend from 2003 on the pound yen. And it is just absolutely curve fit, and this is bad news. And that's because if you launch a trading strategy live onto the market and it has clearly overfit the data and you've got your live trading account running, you will find the performance on this system will instantly decay, and it will be nothing like the performance on its previous training data set. And this has happened to me countless times earlier on in my experimentation with machine learning, and it really sucked. And to set expectations, many systems that you develop as well will experience this exact same behaviour. And to prove the point, I've just rerun that Euro USD strategy that we found that was in the builder before. That was a little bit exciting. is the results from 2011 up until 2018, and I have just gone and run it on some additional data that it hasn't seen from 2018 up until 2024. And yeah, you can see what's happened. But this just goes to prove the point of how easily you can curve fit a strategy to the data that you've trained off, because look at what's happened here when it's run itself on data that it hasn't seen before on the same instrument. Yeah, nah. So how do we avoid this phenomenon of constant strategy implosion? Well, primarily that's done through robustness testing. And these are statistical stress tests that will help us determine whether a trading strategy is absolutely garbage or not. And the less garbage, the more of a chance that it has to survive on future unseen data. And we will be going heavily into robustness tests a little further down the line, but for now, just be aware that they are there to help us, and the results from these can be pretty exciting, particularly if the results from these hint that you have managed to find a kick-ass system that you can run live for some future trading wins. And speaking of trading wins, man, December has been an absolute ripper of a month so far. Well, 2024 overall has been a really crazy year with plenty of volatility floating around in the markets. And a lot of it, I think, has been due to the shenanigans that have happened in the Middle East and Russia and the USA. So much so that I've recently added Bitcoin into my main portfolio to add fuel, hopefully, into 2025's results. And the test results that I've had from running these systems on Bitcoin were really pretty ridiculous. I feel like you could nearly slap any basic trend-following system onto crypto CFDs and you'd make some pretty good bank. And speaking of results, if you'd like to follow my own trading results, the links will be in the video description for every video going forward. I'm always very transparent about my own results, and they will always be on display as an example of realistic expectations in the Forex world. And I hope that many other traders out there have also enjoyed some heavy wins this year, no matter what trading method you use, because there are obviously many ways to skin the poor cat. But here at Forex Trading Robot, we will be going heavily down the machine learning path. And this not only has the benefit of being able to eventually trust your process and trust your systems, because they will be backed by a huge amount of data, providing your trading edge, but you can also day trade without having to sit at a screen all day. You can go to a gym or something, or I don't know, start an alpaca farm if that's your thing, or work multiple jobs to help feed and snowball your trading account, because your systems will be trading for you automatically in the background. And this is a really unique way of doing things, and not many retail traders do things full-time in this way. So to sum this one up, machine learning, which is a subset of AI, is a really exciting field to get involved with, and things will get a little bit data sciencey, but trust me, it's not boring at all. It's actually really quite addictive and very exciting, particularly when you start getting consistent results from your live trading, and when you know that you have full confidence in your trading method. We've still got a few important introductory videos to get through before starting to get to the main content of this channel, so stay tuned for future content as we dive further into how to build your robust portfolio of killer trading robots. So I hope everyone has a happy Christmas and happy New Year wherever you are based. Here in Australia, we've had a few pretty hot 40-degree days. However, this usually doesn't deter Santa. Maybe he actually got sunburnt or something and went back to Canada where it's minus 30 degrees. Shout out to all the Canadians out there that are coming into winter and that are having to deal with Trudeau. Yeah, we've got a similar problem here down under to add to our wildlife woes, such as our killer snakes and jellyfish and spiders, crocodiles and cassowaries. I don't know why this place is so dangerous. Anyway, 2025 is going to be an exciting year, and hopefully the volatility in the markets continues so everyone can continue having some good runs. I'll catch you later in the next episode.